Tailored Crypto Regulation Frameworks. A look at MiCA.
We have a great panel today. If we can get the panelists up on there, that'd be fantastic. You're going to be introduced to some fantastic legal experts, and we're going to be talking a lot about the crypto industry, crypto regulations, and how things look. So if you guys, I'm going to try and do this in order, and forgive me if I mispronounce your name because I'm British and my pronunciation of everything is terrible. So we'll kick off with Gregory. I'm not going to try and pronounce your last name. Gregory, I'll let you introduce yourself when you get up here. Then next up, we have got Anna. Then we've got Pavel. And the last person is currently on their way. So great for everybody to be here. Guys, what I'll do, I will let you, I will go down the group, assuming the last person joins us, and let you introduce yourselves. Perhaps give us a good 60-second snippet as to who you are, where you're from, what you do. And then I'll conclude and start asking you guys some questions. So, Pavel, let's begin with you.
Yes, does it work? Yes, cool. I represent Pillar Legal. It's a full spectrum law firm, Swiss law firm, advising clients in Europe, advising clients in Latin America, in Australasia on legal and regulatory issues, on complicated litigations and similar hot topics, hot issues for iGaming, blockchain gaming, and online gaming industry. It's my first time at Sigma, so I think it's really interesting. This year, I see that it's, and I was told it's even bigger than all the previous years, as far as I remember. So it's really exciting to be here. Thank you for inviting.
Anna?
Hello, dear audience. My name is Anna Agu. I'm managing partner and co-founder at Lex Law Office. We are a law firm based in Tallinn, Estonia, and Vilnius, Lithuania. We work with international clients all over the world from the fintech, IT, and crypto space.
Very cool. Ioannis?
My name is Greg. I run the biggest non-dollar stablecoin. It's called EUROS, out of here of Malta. Started with the regulatory framework 5 years ago. Helped craft what's called VFA Act in Malta, and now preparing for MiCA.
Fantastic. And I'm Cal Evans. I'm also a lawyer, with which there seems to be lots of us. I'm the managing associate of Gresham International. I also run a small venture fund. Been working in this industry for a number of years. Proud to be back at AIBC Sigma for my third year. Probably too many years. I write, I speak. I wrote the Little Book of Crypto back in 2019. I've worked with a number of governments, and it's great to be alongside so many other industry thought leaders working in the same space. It's fantastic. So I know we've only just arrived, and we've all kind of run here. We're all joking in our group chat, so I'm not going to dive straight in with very heavy questions. But obviously, we are looking at regulatory frameworks. Let's talk about the shift in the last kind of 2 years, because I think the last 2 years have been pivotal geographically. And some of the biggest things that you have seen as professionals working in this industry and how you think it's going to impact it. I'll kind of give you an open forum as a first question to kind of talk about what you've seen in the last 2 years changes. Greg, let's kick off with you and work our way down.
Sure. So the digital asset industry experienced quite a bumpy ride with several attempts to regulate it on a regional level. So there were multiple countries trying to implement particular frameworks. But the bad news is that banking system completely refused to accept those type of licenses. So even though a project could have applied and even got some particular license in a particular jurisdiction, then when it came to the banking rails or banking counterparties, they treated that activity as a very high risk and most of the time refused to work with the project. So MiCA is an attempt to make a nationwide solution to that, to address it properly, so no bank could refuse to accept these companies as clients. Over the course of these years, we tried different attempts, different structures to work through different EMIs and different banking partners. Some of them were charging significant fees to run the accounts for companies that do stuff in crypto space. It has evolved, of course. So banks learned how to work with companies, introduced some AML practices and screening algorithms to identify what is an actual activity that's happening. But still, it's a long way forward, and the market, as you have seen, have cleared itself out of the ICOs, IDOs. Some of the companies are being sued now in the United States and other jurisdictions. Some founders even got jail time. So I think the developments that are happening are for the good. The industry will continue to drive forward, and the innovation of this industry at its core of it is that it disrupts clearing, custody, and settlement. And while these services were historically oligopolized, of course, the industry faces competition, faces lobbyism, right? Faces from centralized institutions like big money center banks. So we need to give it more time. We need to get more experiments, but I'm quite hopeful for what's coming, because Central Bank of Lithuania, Central Bank of Switzerland, and now Central Bank of United Kingdom opened up solutions to bank directly through those institutions for innovative companies, for crypto issuers, for stablecoin issuers. In fact, as last week, Central Bank of UK announced they'll be supporting those payment rails. And those were quite innovative. Lithuania started with that and proved that this technology works. It can facilitate payments, inject directly into the banking system, and no bank refuses to accept those transactions on the other end. So I'm quite hopeful for what regulation can bring to this table, and definitely it will increase the total market size and give comfort to participants to touch and use these assets, these instruments.
Awesome. Yeah, thank you for that, Greg. Anna?
Yeah, thank you so much for those important aspects that you raised up. From my side, I can share what is happening, because you already touched the Lithuania, I will touch Estonia. Estonia was one of the first countries who started to introduce the regulation for the crypto asset service providers in 2017. So we have the history and background behind. A lot of lessons to learn. There was like a big adoption of the crypto in Estonia, and there was a lot of market participants in 2018. Especially, we had around 2,500 companies with a license. For tiny Estonia, it's a quite huge number. For now, we have had 2 amendments in the law. So right now, the current regulation in Estonia was introduced in 2022, and we have currently around 80 regulated market participants in Estonia. And current regulation is quite similar already to the MiCA requirements, because when we drafted the regulation in 2022, we took MiCA as a sample. So it will be a smooth transition period for Estonian companies. And actually, they have suffered a lot from the good point of view, because there was a big swift and to the more compliant, to the more regulatory framework in Estonia. And also our local regulator, FIU, who is having the power to control and supervise the authorized legal entity, have done a lot of work. Right now, market is more transparent, and I'm having actually the good feeling that we will have more strong companies with a good approach, who are understanding the rules, who are understanding that they are financial institutions, that they need to meet classic financial regulation that we had in European Union for many, many years. So MiCA is a step forward, but you as a market participant, you always need to remember that you are providing the financial services, and you need to expect to be regulated and be controlled and supervised. Thank you.
Absolutely. Yeah, Dr. Pavel.
Yes, well, thanks a lot. Very interesting remarks and very interesting projections. Especially, it's very good to know how are you progressing with MiCA implementation in Estonia. I just would like to make a number of remarks. In the past years, we've seen, first of all, quite a huge deviation from the initially implemented principles of technology neutral regulation. So what we've seen is that 5-6 years ago, people were more, people are still coming. You see, it's a very famous, very popular panel here. How are you? So I was just speaking about this famous topic of yours about technology neutral regulation. You're just right in time. So 5 years ago, the mantra was that the regulator would adopt a particular particular law, saying that okay, we're gonna implement that law, but we would like to remain being technology neutral. So the law would not affect and would not embrace particular technological solutions that we would like to regulate. We just would like it to be based on some principles. Currently, we see quite a rapid transition, quite a rapid shift to regulators more working on particular technical features, discussing and analyzing them. The first example of technologically focused regulation, if I'm not mistaken, I think it was Gibraltar. It was a blockchain act, and it was the regulation of the companies. I think in the world, it was Gibraltar, and now with Luxembourg and Switzerland and Liechtenstein already introduced very strong legislation concerning DLT securities, where you can issue securities directly on a distributed ledger, not mirroring, not following the cliche of adapting the real world assets and just making a copy of them, publishing that on blockchain. You could initially issue your shares on DLT. So potentially we expect in Switzerland that companies such as Coca-Cola and all the major other companies would be issuing their shares on distributed ledger technology directly and in Switzerland. So just to emphasize that currently more and more regulators all over the world are thinking and embracing a new concept where they're saying and they're promulgating their legislation, tackling particular technological solutions and regulating them. It's quite a big shift from purely technological approach to purely technological neutral regulatory approach in the past. It's the first thing. The second remark from my side would be that in the past years, there's always been a big debate about rules-based or principle-based regulation. And in the past 4 or 5 years, we are seeing more and more companies, more and more regulators thinking that, okay, now we make a turn and we would like to build something new. We would like to adopt a regulatory concept built on principles and regulations being mixed, combined. So, and let's call it more, that's the concept, PBR, more principle-based regulation. It's quite a revolutionary concept, but it's quite well known in the field of financial regulatory markets, in the field of financial supervisory approaches and similar. So this would be the second trend. So we are moving towards implementing new approaches and new concepts in regulation. So this would be the approach of MPBR, more principle-based regulation, meaning ultimately that there should be a good, healthy balance between those rules precisely determining the behavior of the company, of the entrepreneur, and the principles, healthy mix of the principles on which that regulation should be built. So this would be ultimately the biggest challenges of the past years, I would say. But just a quick remark, and then I done, is that when you are a regulator, you have to challenge yourself constantly. You have to challenge yourself permanently. You have to know, you have to approach, and you have to know what you're going to do and how you're going to regulate particular things. Remember the bit license, New York. So it was difficult to protect the customer, to protect the financial markets, to protect the functioning, following the traditional aims of financial regulation, which is the market protectioning of the function of the market and also protection of the customer. And they choose the approach in New York with introducing a bid license of controlling technically the entrance and the egress points, the both of the points in the network. So this is the easiest way to control and to regulate. If you would like to regulate gambling industry, then you could say, okay, I would like to control the entrance point, which would be the license. I would like to control the exit point, which would be ultimately the end customer being able to submit a complaint about money's lost or something else. So this would be the basic and the most popular approach. At the same time, in the past years, in the past 6-7 years, we've seen regulators, we've seen supervisors in many other countries in the world introducing a whole area of different approaches. So that approach of bit license in New York is not the only possible option to regulate the market, and we finally get to understand that. I hope that we are getting on that way to implementing new approaches to regulation. So this would be about all from my part.
All right, perfect. So, I'm gonna let you take a breath. I won't jump in on you halfway through a question set. I'll ask another question. I'll let you introduce yourself and then jump in first. It was interesting. It's a very interesting mix of answers there. And the reason I picked 2 years is because you'll get different answers from different legal professionals. I picked 2 years because I think everything before that was almost putting, in the English expression, putting your toe in the water, seeing how it goes. I think regulators have only really just got serious about things. I think from a legal perspective, that's very cool. And which is why I'm going to ask my next question, which is, being selfish, question you always get asked is, where should I set up? Where should I go? What should I do? It's the question we probably get asked the most. But actually, everybody sitting here is thinking, well, where should I look at? What do I do? So I start with, and I love asking lawyers this question, what's your top 2 jurisdictions and why? Without pitching it, without selling it, just why? Dr. Ioannis, I'm going to let you introduce yourself and then answer the question.
Yeah, Ioannis Revolidis here. I'm a lecturer and academic here at the University of Malta. My area of specialization is IT law and the regulation of crypto assets. When it comes to the question per se, first, before I answer, sorry that I was late. It was a tough morning going around Malta today, but I'm happy that I made it. When it comes to the question per se, if I were to answer as an average consumer, I would say that the jurisdictions that I would choose are those that have a robust regulatory framework in place. Why? Because crypto assets are inherently risky. And without any rules in place, I might not even be able to bet as much as I can tolerate to lose, because we all know that average losers might be tempted to go a little bit beyond what they can afford. The allure of crypto assets is such that it might push them in that direction. So I would say that looking at the global level, the jurisdictions that have traditionally have had some experience in dealing with crypto assets, I would either go to Singapore, which is a country that has been super active, especially through creating case law worldwide, or I might have chosen Malta because, look, we are in Malta. We have to say something good about Malta as well. But jokes aside, Malta has been one of the first countries to put in place a regulatory framework which is quite similar to what the MiCA regulation is going to do. And I think that is a testament to the robustness of the approach taken here in Malta. Now, if I were not an average user and I was a company that wanted to have a more relaxed, so to say, environment to operate in, I think I would have probably gone either in the Bahamas, because, you know, many weird things happened in the Bahamas lately in the crypto space. Or, I don't know, I might have chosen to stay in the United States. Why? Well, because the United States has adopted its traditional wait-and-see approach, which means that for the foreseeable future, things are going to be murked with doubt. And doubt usually works to the benefit of those that are trying to undertake something from a business point of view. But yeah, that would be my 2 cents on this part.
Thank you. Gregory, I'm going to dip down with you and then work our way back.
Sure, I'll be more practical. I say go with the bank. So ask the bank what jurisdiction they'll feel comfortable onboarding. And keep in mind that there is this big trend of narrow banking coming in. It's in stealth mode. It's not yet publicly known, but narrow banking is going to be a big thing. And currently there are two central banks that support it already live. It's Central Bank of Lithuania and Central Bank of Switzerland. So you could get a sense which jurisdictions you could go with. But Malta is actually quite, has good prospects on that front. They plan to upgrade the Malta Central Bank to allow for same connectivity. Given the Maltese speed, not sure when that comes, but if it comes, Malta could be one of the jurisdictions to choose from.
Perfect. Anna?
Well, this is the question that we basically receive daily, like from the clients. And my answer is, it really depends. It really depends. Where are your clients? Number one. Where are your investors? Number two. And you need to take into account, in addition to the crypto regulation, other aspects that are important when you are establishing your business, such as tax system, supportive business environment, transparent court system, also reputation of the country. And taking into account those 6 main points, you can come to the conclusion which kind of particular country is suitable for a particular project. Because it really depends. If you have like some kind of interesting model, some jurisdiction can be more supportive for you. For example, if you need to have the DAO structure, the foundations are basically done in Switzerland. If you need to issue the token and you want to be regulated, Estonia offers this regulation since 2022 for the token issuers. So it really depends. But coming back to this question, if I need to pick 2, my answer is number 1 is Switzerland, and number 2 is Estonia. And it's depending on the project. And the answer why, because both of these countries are having the regulation for the crypto industry already for more than 6 years. And we have the knowledge and practice how to actually supervise those companies, which kind of main questions they have, how to understand their business model, and how to help them to be compliant and transparent for the market. Thank you.
Awesome. Thanks, Anna. And Pavel?
Well, I think it would largely depend on the project, largely depend on what business you're in, guys. So if you are in gambling, I would recommend Malta as one of the options, and it's not a bad option, absolutely. We see, and I believe that some more positive changes are coming in the Maltese legislation, as Gregory has already mentioned it. We're going to discuss it later this week at the Maltese Financial Services Authority events. Depends on what business you are in. Most of the startups, if you're searching for financing rounds, then of course you would need to have a presence in California. I suppose it would be absolutely a must to implement approach. Probably Singapore, if you would be able to cope with the regulatory requirements, which are quite tough. If you would like to get a sense of stability and arrange for a stable inflow of capital and public money, then I suppose Switzerland would be a good choice, a good location. If you are DAO, of course, Switzerland is also famous for hosting a number of the DeFi projects and DAOs, but it's also Singapore.
I'm only going to let you pick 2. The question was 2, so I'm only going to let you pick 2.
So I think it's Malta and Switzerland. Again, depends on what you do.
Okay, perfect. So good news, guys. We've been given an extra 7 minutes. Aren't you people lucky? You thought you were going to have 60 seconds left of the lawyers. So we've been given an extra 7 minutes, which means I get to think of another question for all of us. But let me just answer the question first, because it's rude to ask a question then not answer it. I'm a fan of the following a TradFi route and a DeFi route based on whatever the legislative framework is. And I think that's a little bit what you were kind of, everybody was trying to say, right? I like a heavy reg tech set location, somewhere where there's establishment, case law, regulation. I also like jurisdictions which are more friendly. Sometimes these are referred to as the gray zone. I don't know whether that's a proper term to use, but offshore friendly jurisdictions. So it gives your project a chance to flourish while working within a regulatory framework. So That's my 2 cents worth. Anyway, now we have an extra 7 minutes. Let's think of another question. No, but what do you guys think, working within the industry from a legal perspective, at a 30,000-foot view, are some of the biggest changes that we are going to see within the next 12 months? And I know we've got MiCA and VARA and some other things coming down the pipeline, but the real heavy-hitting changes, what do we think right now people in this industry can do to adapt, to get ready? What do we think those changes are going to be? Anna, you seem the most excited about this, so I'm going to let you answer it first.
Okay, I will start. I will kick off. First of all, I would like to give the most well-known advice: start running first and start preparation in advance. Because actually there is already published paper by ESMA that you can take into account. We already have the MiCA. This is the final regulation. We only waiting for the guidelines, but we have already the practice of the traditional financial institutions as e-money institutions, payment institution, investment funds, and most of the guidelines will come also from there. So actually, if you will have the quality lawyers, they can already start the preparation in advance for the transition period for MiCA. And it is important to start running first because first, maybe you will need to change your products or services. Maybe you will need to change, most probably you will need to change your structure. And maybe you will need to establish the better connection with the new regulators, because most of the countries are changing the regulators right now. Even Lithuania, the regulatory authority will be central bank. In Estonia, FCA will be the regulating authority. So it's important to start thinking in advance about your product, about the new requirements, about your structure, about the communication with the regulator, and about your banking solutions.
Awesome. Thank you. Ioannis, I'll let you go next.
Yeah, thank you. I agree with the points raised by Anna. Yes, indeed, it is a period where companies will have to make haste in order to catch up with what comes up. But apart from that, that part, I would say that companies in the crypto space and people interested to enter into the crypto space, they need to understand that a huge cultural shift has happened. Like the days where we could set up a Discord server, publish a white paper on a Discord server, and start making money are over. This environment, at least in Europe, will not exist anymore, which means that crypto companies need to gradually grasp with the reality that there is going to be a supervisory authority, that the era of the code is law is probably over. Like, it was fun while it lasted, but the Wild West period of crypto is over, right? And of course, I think not only because of MiCA, but because of all the major incidents that happened over the past 2 years, Terra Luna, FTX, and the such, I believe that crypto companies need to mature. They need to come to a stage where, so to speak, responsibility becomes more pronounced than hype. Because even without the MiCA regulation in place, people are already concerned about what is going on in the market. And I believe they rightfully do so, because the industry did not do a favor to itself over the past 2 years. I believe that acting responsibly is going to be a huge competitive advantage now, because the general public is alerted and they are asking for it. Like, even if MiCA did not exist, we would have to invent it eventually, because that's where the industry needs to go.
Yeah, absolutely. Gregory?
Guys, let's talk some numbers. So there is the market that exists currently. It's stablecoin market. It's worth 100 billion, and it's going to be regulated the next year. So just imagine how much of opportunity it is to bring some of that market under this regulatory umbrella in Europe. And this is the fastest growing market across all crypto sub-markets. It grows at 50-60% per year, regardless of the crypto winter, regardless of the correction in the altcoin or Bitcoin prices. The number of transactions that settle through stable coins almost double every year. And it's still unregulated. It's mind-boggling to think that it was still unregulated up to this moment, but it's going to be regulated, and we'll see billions and billions of this marketplace to come under this umbrella, and this is the most exciting challenge and opportunity there is.
Perfect. I'm King Pavel. We've got 7 seconds. Jump in. Go.
Yes, I think it's DLT securities and opening of some licensing prospects and categories in the UK and also in 2025 in Switzerland.
Fantastic. Thank you, sir. Guys, I want to thank you all for being rock stars, for being here, for listening to us, for making it through the traffic, for being in early on day one. You are rock stars. But I want to thank everybody for joining me on this panel. Let's give everybody a massive round of applause. Thank you all. Let's get some energy up.